Hello viewers, welcome to my channel. I'm Hasham. Till the last video I have completed 6 problems. Now in this video 7th and 8th problem I am going to explain regarding the computation of income from salary. So if you have watched all the earlier videos, now you are in a position to attempt the problem on computation of income from salary. So for computing the income from salary, specific procedure is given. The 4 subheads are: first, salary; second, allowances; third, perquisites; fourth, profit in lieu of salary. The total of these 4 subheads is called gross income from salary. From gross income from salary, 3 deductions are available. Deduction under section 16(1), that is standard deduction. 16(2), entertainment allowance deduction. 16(3), professional tax. After giving these 3 deductions, we'll get income from salary. So all the problems are based on the provisions. So be perfect regarding the provisions. Always maintain a note for the lectures which I am giving, because there is a possibility you may forget the provisions. Still we are in the income from salary head. Still we have to, complete income from house property, income from business and profession, then capital gain, other sources. All these are the other heads we have to complete. So always maintain a notebook, record all the answers. Now before starting the 7th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Take the screenshot of the points, then I'll explain. Now, 7th problem. Mr. Chandrasekhar is working in Rajesh Exports Limited. The first point, the SSC is a non-government employee. His salary particulars are as under: compute income from salary. So, first of all, we'll write the format. Mr. Chandrasekhar, computation of income from salary for the assessment here, 2 columns. Basic. The basic salary 21,300 per month. So, 21,300 per month into 12, 255,600. Then DA. DA is taxable, fully taxable under the head allowances. So 8,000 per month. So I'm just writing a tick here so that we can be able to know we have completed the basic. Then DA 8,000 per month into 12, 96,000, fully taxable. Entertainment allowance EA, fully taxable, 25,000 per annum. No deduction for EA is given because the SSC is a non-government employee. Medical allowance, fully taxable. Medical allowance 2,000 per month into 12, 24,000. Then bonus, 10% of basic. Bonus is taxable under the subhead salary. So bonus 10% of basic, 10% of 2,55,600, 25,560. Bonus over. During the year he received a cash gift of 65,000 and laptop worth rupees 35,000. In the previous videos I have explained you the gift given by the employer. What are the provisions under Income Tax Act 1961 for gift given by the employer to the employees? Income Tax Act says any cash gift given by the employer to the employee is fully taxable. So here cash, during the year he received a cash gift of 65,000. So this 65,000 is fully taxable. Now regarding laptop, it is the gift given in kind, not in cash. So if a gift is given in kind, up to 5,000 tax free, over 5,000 taxable. So here it is given 35,000. So out of 35,000, 5,000 is tax free. So 30,000 is taxable. So first of all, cash gift 65,000 fully taxable. Laptop gift out of 35,000, 5,000 is tax free. So 30,000 is taxable. So 65,000 plus 30,000, 95,000 rupees gift received from employer, fully taxable. It will come under perquisites. Gift received from the employer, 65,000 cash gift, and 30,000 is the gift given in kind. Out of 35,000, 5,000 tax free, 30,000 taxable. So 95,000 is the gift. Now Rent-free furnished accommodation is provided in Pune city, population 37.56 lakhs, for which rent paid by the employer 10,000 per month and the cost of furniture provided is 3 lakh. For rent-free accommodation, first you have to see whether government employee or non-government. The SSC is a non-government employee. Then you have to see whether the accommodation is owned by the employer or hired by the employer. Here the accommodation is hired by the employer, not owned. If it is owned, then we have to see the population. If it is hired, no need to consider the population. So if the accommodation is hired by the employer, then 15 actual rent paid by the employer or 15% of salary, whichever is less is the value of the perquisite. So in our problem, the owner, the employer has hired the accommodation, not owned. So we don't require population. So rent paid by the employer is 10,000 per month. So here you can see rent-free accommodation. The SSC is a non-government employee and accommodation is not owned by the employer. So the value of the perquisite is list of the following two amounts. Rent paid by the employer 10,000 per month into 12, 1,20,000. 15% of salary. Now we need salary. Salary means basic plus bonus plus fees plus commission plus all taxable allowances except DA. DA will be included only if it enters for retirement benefit. And any monetary amount given by the employer to the employee or any profession tax or income tax paid or reimbursed by the employer. This is the complete meaning of the term salary for RFA, for rent-free accommodation. Now basic, we have taken here, salary is equal to basic. This basic 2,55,000. Bonus 25,560 we have taken. EA. DA we are not taking because DA is not entering for retirement benefit. If it enters for retirement benefit, then only we would have taken. Otherwise, no need. We should not take. We should not take DA. EA is fully taxable. So we are taking EA 25,000. Then medical allowance fully taxable. So we are taking 24,000. So these four items will come under salary. 3,30,160 is the salary. So 15% of 330,160 comes to 49,524. This 49,524 is the value of rent-free unfurnished accommodation. So value of rent-free unfurnished accommodation 49,524. To this we add 10% of the cost of furniture. The furniture is provided for 3 lakh. 10% of 3,30,000. Add up 30,000, 79,524. This is the value of rent-free furnished accommodation. Now take this 79,524 value of rent-free furnished accommodation. Next one. A small car is provided for personal and official purpose and all expenses including driver's salary is paid by the company. Motor car is a taxable perquisite for specified employees. Who is a specified employee? Employee director, employee shareholder, or an employee whose salary is more than 50,000 per annum. Here the salary is more than 50,000 per annum. So he is a specified employee. So motor car provided by the employer is a taxable perquisite. So small car, it is given in the problem, small car is provided for both official and personal use and all the expenses are paid by the employer. Then the value of the perquisite is 1,800 per month. This is given by the income tax rules. Already in the previous video in perquisites I have explained all these things. That's why I'm stressing on the students first of all to watch the theory videos. So in the theory video I have explained if a big car is provided both for official and personal use and all expenses are paid by the employer, 2,400. For big car 2,400 per month, whereas for small car 1,800 per month. These are the provisions you have to remember. Note it down. So 1800 per month is the value of the perquisite. So value of motor car perquisite is 1800 per month into 12, 21,600. A driver is also provided. So according to income tax rules, if a driver is also provided by the employer, then 900 rupees per month will be added to the value of car. This again 900 rupees specified by the income tax rules. So 900 into 12, 10,800. Total comes to 32,400. So 32,400 is the value of the perquisite of motor car, small motor car given by the employer to the employee for both official and personal use, and all expenses are paid by the employer. That's it. So we got the value 32,400. Next item. Next item is mobile phone bill paid by the employer. So if any mobile phone bill or telephone bill of the residence of the employee paid by the employer is a tax-free perquisite. Note it down. In the previous problem also we came across this point. Then his contribution to recognized provident fund RPF is 12% and the employer's contribution is 14%. Already in most of the problems we have done, employer's contribution to RPF is taxable over 12% of salary. So up to 12% of salary it is not taxable, over 12% taxable. Here employer has contributed 14%. That means 2% more he has contributed. That 2% is taxable. So here employer's contribution to RPF in excess of 12% of salary. Actually employer contributed 14%. So 2% of 255,600, 5,112. That's it. So next item, he paid profession tax. He paid profession tax for 2,400, deduction under section 16.3. The last item, deduction under section 16.3, 2,400. That's all. We have taken all the items. Simply you have to find out the total of all the items here. Every item is ticked. So total 6,38,196 is the gross income from salary. From these two deductions, first deduction is standard deduction under section 16(1)(a). Gross income from salary of 50,000, whichever is lower. So 50,000 is lower. EA deduction will not be allowed because the SSC is a non-government employee. In working note you should write down. Then profession tax paid under section 16(3), 2,400, just now we have seen. So take 52,400 deduct, 5,85,796. This is the income from salary. But you have to write the working notes. First working note, gift received. Already I explained. Cash gift received from the employer, fully taxable. Gift received in kind is tax free up to 5,000 and over 5,000 it is taxable. In our problem, laptop is given for 35,000. So remove 5,000 from 35, 30,000. So 65 plus 30, 95,000 is taxable. Second, RFA, just now I have explained you about rent-free accommodation. Then car provided, I have explained you small car. So 32,400. That's all. These are the points you have to write in working notes. Next, now I am going to start the next problem, that is problem number 8. Mr. Chandra Prakash is working in a limited company, again non-government employee. His salary, monthly salary is created in the saving bank account of SBI branch. Compute taxable income from salary. So first of all, format you have to make. Then basic. Basic is given 14,500 per month. 14,500 per month into 12. 1,74,000. Second, CCA, city compensatory allowance, fully taxable. So 1,74,000 basic. CCA 2,300 into 12. 27,600 fully taxable. Traveling allowance 24,000 per annum. 80% is spent for discharging official duties. So for traveling expenses, only amount unspent is taxable. So out of 24,000, 80% he has spent on official duties. That is not taxable. Only 20% is taxable. So 24,000 into 20%. 20% of 24,000, 4,800 taxable. Reimbursement of medical expenses incurred in an unrecognized hospital. In perquisites, I have explained you. If medical treatment is done in a recognized hospital and amount is reimbursed by the employer, it is tax-free perquisite. But reimbursement of medical expenses incurred in an unrecognized hospital is fully taxable. Recognized, tax-free. Unrecognized, fully taxable. So here reimbursement, unrecognized hospital, 31,000, fully taxable under perquisite. Then rent-free furnished accommodation is provided in a city. Population 2.8 lakh for 12 months. And the employer is owning the building. Now again, previous problem we have seen, the accommodation was not owned by the employer. That's why we have taken list of the following two amounts. But here the accommodation is owned by the employer. So now we have to find out the population of the city, because three categories are there. The first category, if the population of the city is less than 10 lakh, it's a small town, 7.5% of salary is the value of the perquisite. If the population size is more than 10 lakh but up to 25 lakh, more than 10 lakh but up to 25 lakh, 10% of salary is the value of the perquisite. If the population of the city is more than 25 lakh, then 15% of salary is the value of the perquisite if the accommodation is owned by the employer. Here accommodation is owned by the employer and it is provided in a small town, 2.8 lakh, less than 10 lakh. So 7.5% of salary is the value of the perquisite. All these are the provisions given by income tax rules and I have explained in the theory video. So if you have not watched, I suggest you go to the playlist, take out the income from salary videos. In those, select the video of perquisite. You will find all these points. So the SSC is a non-government employee, accommodation is owned by the employer and provided in a small city, so the value of the perquisite is 7.5% of salary. Salary meaning. Salary meaning is basic plus bonus plus fees plus commission plus all taxable allowances except DA. DA will be included if it enters for retirement benefit, plus monetary benefit given by the employer, plus income tax or professional tax paid or reimbursed by the employer. This is the complete definition, meaning of the term salary for RFA, right? Now salary is equal to 1,74,000 basic. Then we should not take employer's contribution. It is not there in the head salary. Then CCA fully taxable 27,600 and traveling allowance 4,800 taxable. So salary comes to 2,06,400. So value of unfurnished accommodation 7.5% of salary. So 7.5% of 2,06,400, 15,480. This is the value of rent-free unfurnished accommodation. To this, we have to add the cost of 10% of cost of furniture provided. So here furniture worth 60,000 worth is provided for 10 months. So 10% of 60,000 into 10 by 12, because for 10 months it is given. So it comes to 5,000. So total is 20,480. This is the value of rent-free furnished accommodation. Rent-free furnished accommodation. Next item is telephone bill of the residence paid by the company is completely tax-free, exempted in working note issued right. The company presented a gold ring worth rupees 35,000 and a gift check of 15,000. Actually, gift check is nothing but a cash gift. Gift check is a cash gift. So cash gift is fully taxable. So this 15,000 fully taxable. Whereas gold ring is a gift in kind up to 5,000 tax free. So out of 35,000, 5,000 remove. Only 30,000 you take. 30 plus 15, 45,000 rupees is the taxable gift. So here you can say gift given by the employer. 30 plus 15, 45,000 rupees is the gift, taxable gift. Then comes his contribution to RPS is 15% as the salary, and employer also contributes equally. Employee's contribution will qualify for deduction under section 80C, but right now we are not concerned. We are concerned only with computing the income from salary. We are not finding total income. When we have to find out the total income, Then we'll consider the employee's contribution to RPF. Right now, only employer's contribution to RPF. 15% he is contributing. So, employer's contribution to RPF is exempted up to 12%. So, here he contributes 15%, so 3% extra. That 3% is taxable. So, employer's contribution to RPF in excess of 12% of salary, 3%. So, 15 minus 12, 3% of 1,74,000, 5,220. That is the employer's contribution. Last item given in the problem is, he paid 2,500 as professional tax. The professional tax is allowed as deduction under section 16(3), 2,500. That's all. All the points I have discussed, explained. Now simply find out the total of all the items. You get 3,08,100. This is the gross income from salary. From this deduction, standard deduction, least of the following two: gross income from salary or 50,000. So 50,000 is allowed. And EA deduction, no EA is there, so no deduction. And professional tax paid 2,500, so 52,500 deduct 2,55,600. This is the final answer, income from salary. But in working notes, we have to write about rent-free accommodation, traveling allowance, unspent amount is taxable. Reimbursement of medical expenses incurred in an unrecognized hospital, fully taxable. Then telephone bill of the residence of the employee paid by the employer, fully tax-free. And gift given by the employer, cash gift, fully taxable. Gift in kind up to 5,000 tax-free, the excess will be taxed. That's all. So in this video, I have completed two problems, 7th and 8th. Each and every point I have explained. Hope you got some confidence in solving the problems of income from salary. Inshallah, we'll continue the next problem in the next video. Give a like to the video, share my channel, give your comments, subscribe if you have not yet subscribed my channel, and by the super thanks which is given below my video. Inshallah, we'll continue the next problem in the next video.